Okay, students, let's start IAS 33 questions from your latest Kaplan Kit. Question 121. What is the basic EPS to 1 decimal place? Okay. For the year ended 31st November 2007. According to IAS 33, an answer will be in cents. Okay. Instead of car fish, it is gar fish. Had profits after tax 3 million. In the year ended 31st November X7, this is the year end. On 1st January X7, Garfish had 2.4 million ordinary shares in issue. So at the start of the accounting period, they had how many shares? 2.4 million ordinary shares in issue. Okay. Then on 1st April X7, Garfish made a 1-for-2 right issue at a price of 1.4 when the market price of the share was $2. See, whenever there is a right issue, it is always advisable first deal with the right issue. So let us first calculate bonus fraction in right issue. Shares, values, and simply total value. Made a 1-for-2 right shares. 1-for-2. 1-for-2. Whoever is simply against each two, they made one right. Right issue price is 1.4 and share price before right is 2. So we can say that 3 shares are having total value 5.4. If 3 shares are having total value 5.4, so we can calculate the value of 1 share, that is theoretical X right price. Another name for the theoretical X right price is share price after the right issue. So 5.4 divided by 3. 5.4 divided by 3 gives us 1.8. Simply your bonus fraction is, you can say, share price before right, which is 2, and theoretical X right price is 1.8. You can work on this. 2 upon 1.8 is your bonus fraction. Okay. And we will simply multiply all those shares in the question. They are there, but before the right. Okay. Now let's try to calculate weighted average shares. Let me show you the pattern. Date. Okay. Numbers. Fraction of the year. I'll tell you what do you mean by this. Fraction of year. We only have right issue, so rights fraction. Then you will get weighted average ordinary shares. Okay. At the start of the question, 1st January, how many shares do we have? 2.4 million. So simply I have written 1st January. Number of shares I'm working in million, they are 2.4 million. So I hope you should not be having any issue in this 2.4 at least. Okay. Now, how many months do we have 2.4 million shares? Can I say from 1st January till 1st April, there's a gap of 3 months. From 1st January till 1st April, there's a gap of 3 months. So out of 12, the 2.4 million organization is having how many months? 3 months. Is this clear? This organization is having 2.4 million shares in the first 3 months. Okay. Now, after this 3 months, what happened? That is very important. Please listen. On 1st April, company made a right issue. On 1st April, company made a right issue. Now listen. The bonus fraction of right issue, we will multiply all those shares in the question they are before the right. Can I say These 2.4 million shares, they are before the right issue. Since these 2.4 million shares, they are before the right issue, so we will multiply 2.4 million with the bonus fraction. And the bonus fraction is 2 upon 1.8. Bonus fraction is only applicable on 2.4 million shares. Why it is only applicable on 2.4 million shares? Because these are the shares which are before the right issue. Okay. Now, on 1st April, please try to understand. On 1st April, company has made a right issue. The right issue is against 2 shares, company has made 1 right. Against 2 shares, company has made 1 right. Please try to understand. Before right, we have 2.4 million shares. If I calculate number of right issue, so we will take 2.4 into 1 upon 2. What is this 1 upon 2? Company has made 1 right against 2 shares. Repeat. Company has made 1 right against 2 shares. It means the number of rights are 1.2. Logically, after right, you will company is having 3.6 million shares. Repeat. Before right, immediately before right, we have 2.4 million shares. Logically, if you take right issue, then there's a 50, company has made a 50% right issue. How? See, 1 right against 2 is a 50%. So simply if you can do one more thing. If you take 50% of 2.4, you will get 1.2 million. So simply after right, you have 3.6 million shares. Another way of calculating this 3.6, please try to understand. Before right, you have 2.4 million shares. Shares immediately right. Shares immediately before right, we have 2.4 million. Now in right issue, what happens? Can I say after right, 2 shares will become 3. After right, 2 shares will become 3. So you can do one more thing. If you multiply 2.4 with 3 divided by 2, you will get 3.6. Repeat. After right, 2 shares will become 3. So obviously, if you have 2.4 million shares, you multiply them with 3 divided by 2, you will get 3.6. So there are a number of ways to get the same thing. 3.6 million. After the right issue, nothing has happened in the entire question. It means the fraction of the year will be 9 upon 12. And there's no right fraction because right fraction is only applicable only on those shares. They are there before the right. Now simply let's multiply. 2.4 multiplied by 3 multiplied by, let's say, 2 divided by 1.8 divided by 12. I'm getting 0.66, let's say 7. 3.6 multiplied by 9 divided by 12. I'm getting 2.7. 3.367. These are the weighted average shares. Now simply calculate the basic EPS, which they have asked. Profit after tax. Look at this. PAT is 3 million. So 3 million divided by 3.367. So 3 divided by 3.367. I'm getting 0.891. Now, please, you have to make sure what they're asking us. One, they need answer in cents. So logically, whatever comes, you have to multiply that with 100 so that you should get the answer in cents. Second, 1 decimal. Please try to understand. Right now, I'm getting answer $0.891. If you write the answer $0.891, this will not work. In a multiple choice here, it is specifically mentioned they need answer number 1 in cents, second to the 1 decimal place, which means that if I multiply this with 100, because of the cents. So logically we'll get 89.1 to one decimal. So your answer is, the correct answer is 89.1 cents. So your answer is 89.1. This is 121. Now let's go to 122. What is the basic EPS per share figure for the year ended December X4 according to EPS? Okay, that is according to IAS 33, earning per share. Again, they need answer in cents. So whatever answer you calculate, please multiply that with 100 so that you should get answer in cents. On 1st January X4, Sam company had 3 million ordinary shares in issue. At the start, they had 3 million ordinary shares in issue. On 1st June X4, Sam company made 143 bonus issue. On 30th September, let's do one thing. Question 122. Obviously, first we need to calculate weighted average ordinary shares. So date. Let me take the number. Fraction of the year. Then simply take bonus fraction. You will get weighted average. First January. Let's say I'm working in million, if the data is in million. On January X4, Sam company had 3 million ordinary shares. 3 million. 3 million ordinary shares on 1st June. Now listen, from 1st Jan to 1st June, we have 5 months. From 1st January to 1st June, we have 5 months. So fraction of the year will be 5 upon 12. Fraction of the year will be 5 upon 12. Okay. On 1st June X4, Sam company made a 143 bonus issue. 143 bonus issue means your bonus fraction will be 4 upon 3. Actually, 3 shares, they will become 4 after bonus. So shares after bonus will be 4 and shares before bonus will be 3. So your bonus fraction is 4 upon 3. And this bonus fraction is only multiplied. You need to just multiply this bonus fraction only on, this fraction is applicable only on those shares. They are there in the question before bonus. And we have 3 million shares before bonus. So fraction is 4 by 3. Now listen. Before bonus, you have 3 million shares. Then what happened? Company has made 143 bonus. So can I say that after bonus, logically, you will have 4 million shares? Repeat. If before bonus, company was having 3 million shares and after that company has made a bonus and company issued 1 bonus against 3 shares. So obviously 3 shares after bonus, they will become 4. So this company is having 4 million shares. So obviously 4 million shares after bonus, they will become 3 million shares after bonus, they will become 4 million. So on 1st June, total number of shares will be 4 million. Now let's see after 1st June, when is the next transaction? On 30th September, X4 Sam issued a further 1 million. It means after 1st June, the next transaction is on September. So from 1st June till 30th September. If you count the time period, we have 4 months. June, July, August, September, 4 months. The gap from 1st June till 30th September is of 4 months. So 4 out of 12. Then on 30th September, company has made further 1 million. Now listen. Till 1st June, company was having 4 million shares. Then From 1st June till 30th September, company was having 4 million shares. Then on 30th September, company made further 1 million. Further 1 million means 4 million will become 5 million. After September, there is no transaction. If after September, there is no transaction, can I say from 30th September till 31st December, we have 3 months. So fraction of the year is 3 upon 12. So let us use the calculator. I strongly believe you will find this presentation far more easier and logical also, obviously. You just need to multiply them. Just multiply. So 3 multiplied by 5, multiplied by 4, divided by 3, divided by 12. I'm getting 1.667. Four multiplied by 4 divided by 12. I'm getting 1.333. 5, this 1.25. So weighted average shares, I'm getting 4.25 million. Weighted average shares, I'm getting 4.25 million. Now simply get basic EPS. Let's see profit after tax. Sam company had 3 million. This. Oh, Sam company had profit attributable to ordinary shareholders 2 million. 2 million. 2 million divided by 4.25 million. Why I'm multiplying this with 100? Because your multiple choice answers, they all are in cents. If you just divide $2 million with 4.25 million, you will get answer in dollars. We need answer in cents. So convert dollar. If I need to convert dollar into cents, so I have to multiply with 100. So 2 divided by 4.25 into 100. I'm getting 47.058. Let's see what they're asking. See, right now, here you will be getting answer 47.0, let's say 59 cents. So if you do not have the exact answer, always go to the nearest one in case of 4 options. Obviously, the alpha is the nearest one. 47.1 is the logical answer. Now let's see, 123. During their MAC made a 143 right issue at 1.6 when the market price was 2.2. Last year EPS was 81 cents. There were no other issue of the shares during there. What is the we just need to calculate restated EPS. Students, before calculating restated EPS, you have to first calculate rights fraction. So let us first calculate the fraction of right. Question 123. Shares values and total value. Shares values and total value. So during their MAC made a 143 right. So 3 shares, 1 right. Share price before right, let's see, is 2.2, right is 1.6. So 3 multiplied by 2.2, I'm getting 6.6. So let's see, 6.6 plus 1.6. We can say that 4 shares are having total value 8.2. So what will be the value of 1 share? That is theoretical X right price. Theoretical X right price means share price after the right issue. That is 2.05. 2.05. So here comes the bonus fraction in the right issue, or you can say the right fraction. right fraction. 2.2 upon 2.05. Okay. Obviously, how do we restate last year EPS, previous year EPS? All you need is just multiply previous year EPS with the inverse of right fraction. Repeat. Just multiply your last year EPS, your previous year EPS with the inverse of bonus fraction or right fraction. So here comes the restated EPS. What is the restated EPS? So last year EPS is 81 cents. So simply multiply the last year EPS with the inverse of right fraction. So 81 cents multiplied by 2.05 divided by 2.2. So let me use the calculator. 81 into 2.05 divided by 2.2. I'm getting 75.477 cents. 48 cents. Let's see the choice. Okay, we do not have any choice. So what they are asking, what is a restated EPS figure for comparative purposes? In this, you have to answer cents. Now try to understand. What should we write? This is another question because I'm getting for 75 point, let's say 476. Since in the previous year, last year, examiner did not use any decimals. So over here, you should also not be using any decimal. So look at this. The answer is 75.48. So instead of this, we will just go for 75 cents. Why? Because examiner has not used any decimal in the previous answer. That is why we are going with the 75. Okay. So 81 multiplied by 2.05 divided by 2.2. Fine. Now let's see. Question 124. What is the diluted EPS? Okay. Coral Company has net profit for the year ended 30 September X5. If I ignore 30, it is 10,500. Coral has had 6 million shares in issue for many years. Okay. On 1st October, that is very important. On 1st October X4, start of the year, Coral issued a convertible bond. See, convertible bond is we know that potential ordinary share. It had an initial liability element 2.5 million. Market interest for non-convertible instrument is 8%. Okay. The bond is convertible in 5 years with 50 shares issued for every $100 nominal of convertible bond. Tax rate is 28%. An examiner is asking calculate what is diluted EPS in cents. Okay. The first thing is question says company had 6 million shares for many years. So it means that logically this 6 million is your weighted average ordinary shares, but for the basic EPS. Right now, we are not calculating basic EPS. Examiner has asked us to calculate diluted EPS. Okay. Now, what to do? Let me show you. Question is 124. So we already having number of shares. I'm just ignoring 3 zeros. That is 6,000. Okay. When we calculate diluted EPS, actually we assume that all the potential ordinary shares, they have become ordinary in day one. So shares from conversion. Shares on conversion. We have ignored 3 zeros, so 2,500. 50 shares issued for $100 nominal. So multiply this with 50 divided by 100. You will get 1250. It means your weighted average number of ordinary shares for diluted EPS, there will be 7250. Repeat, your weighted average number of ordinary shares for diluted EPS, there are 7250. Now, let's take earnings. Right now, they have given us the profit. The profit is 10.5 million, or you can say 10,500. Okay. Question 124. Nothing is mentioned, then given profit, we will always assume is after tax. They have given us profit after tax. I'm ignoring 3 zeros. 10,500. Since while calculating diluted EPS, we assume that all the potential ordinary shares, they have become ordinary. So if we have converted convertible bonds into ordinary shares, obviously we will not be paying any interest on these convertible bonds. So we have to calculate interest saving after tax. Add interest saving after tax. 2,500. Interest rate is 8%. Now, please try to understand. The tax rate is 28. So, to make it after tax, 100 minus 28. That is 72. So, just multiply this with 72%. See, when in the previous class, there was tax rate was 30%, we multiplied this with 70. There was one more question in which tax rate was 20. Then we multiplied interest saving to make it after tax with 80. Now tax rate is 28%. So to get interest saving after tax, we are multiplying with 72. If the tax rate was, let's say, if in this question, if the tax rate was 10, we would have multiplied this with 90. So you should be good, really good in this. How do we make interest saving after tax? So 2,500 into 8% into 72%. So let's see what we are getting. I'm getting 144. 144. So simply 10,500 plus 144. 10,500 plus 144. The revised earnings are 10,644. Revised PAT. Students, we are having revised profit after tax 10,644. Weighted average shares, we have 7,250. So very easily we can calculate diluted EPS. Diluted EPS. We have calculated the earnings 10,644. Weighted average shares, we have calculated that is 7,250. Whatever comes, we have to multiply this with 100. Why? Because all the choices are in cents. So 10,644 divided by 7,250 into 100. I'm getting 146.8. We have to go towards only one decimal. So 146.8 cents. So obviously exact answer is delta D. 146.8 cents. Okay. Now, what is ISCO's diluted EPS per share for the year ended December X5? ISCO financial statement show a profit for the year ended December X5, 2 million. On 1st January X5, ISCO had 4 million shares in issue, made no further issue of shares during the year. At December X5, there were 1 million outstanding share options. Students, we have discussed that share options are potential ordinary shares, and in case of share options, only shares for nil consideration are the one which are going to dilute your EPS. So they have 1 million outstanding share option to buy at 3 means exercise price. For the year ended December X5, the average market value is $5. So in case of share options, you just need shares for nil consideration, because shares for nil consideration are the one which are going to dilute your EPS. So simply calculate shares for nil consideration. We have 1 million share options outstanding, multiply by exercise price is $3, the average market price is $5. It means we are not charging $2 divided by average market value. So let's see what are we getting. I'm getting 0.4 million. So shares for nil consideration, they are 0.4 million. So we are already having shares 4 million. So logically, your weighted average ordinary shares are 4.4 million. So simply, we are having weighted average ordinary shares 4.4 million because in case of share options, in case of potential ordinary shares, we make an assumption that while calculating diluted EPS, all the potential ordinary shares, they have become ordinary in day one. So we are having weighted average ordinary shares 4.4. What is their earning? We have earning 2 million. Now look at this. Diluted EPS, take 2 million divided by 4.4, multiply by 100 because the answers are in cents. So logically, I'm getting 45.45. So 45.45 cents. So obviously the nearest choice is C, Charlie. The nearest one is C. Okay. What figure should be used as earnings by Gromit in its earning per share? Okay, what do we use while calculating EPS? Which earnings? Let's see. Gromit company has the following extract of the consolidated profit and loss. So far, we have not studied consolidation, but inshallah, you will study. So while calculating, simply let me tell you, while calculating EPS, we only take the profit which is attributable to parent. So profit for the year, profit for period attributable to parent, that is 2250. So while calculating EPS, we only take the profit which is attributable to parent's equity holder. Repeat. While calculating EPS, we only consider the profit which is attributable to parent's equity holder. That is 2250. Don't worry at all. In this area, you will be automatically become really good after studying consolidation. Inshallah. Don't worry. Which two of the following do not need to be removed from entity's net profit in a statement of profit and loss in order to calculate earnings figure to be used in earning per share calculation? Which two of the following do not need to be removed from a net profit in a statement of profit and loss in order to calculate EPS? Okay, let's see. Number one, redeemable preference shares dividend. Now listen and listen carefully. At the start of IAS 33, we did emphasize too much on one point that redeemable preference shares, they are liability. They are loan. So logically on liabilities, we do not pay dividend. They are using the name dividend, but logically here, this dividend means interest. And we know that interest is already adjusted. Obviously, if there is a profit after tax, so obviously you have already deducted the interest. So logically, while calculating EPS, there's no need to adjust the net profit figure because already interest is deducted. Okay, after that, irredeemable preference shares, obviously they will be adjusted. We just need to tell our examiner that which are the two events which we should not remove while calculating from the net profit while calculating EPS. Okay, profit attributable to non-controlling interest. If you go back and see a first day formula, so we did deducted NCA because your formula is EPS is equal to profit after tax minus preference dividend minus non-controlling interest and divided by weighted average ordinary shares. So if there is any NCA, so we have to adjust. An error in expense discovered after the financial statement have been authorized for issue. See, if you have error in the expense, so you have to adjust that expense. Obviously, when I'm going to adjust the expense, automatically the profit will be adjusted. Ordinary dividends. There's no need to adjust ordinary dividend because in calculating EPS, we take preference dividend. We don't take ordinary dividend. So question 127, I would say, is a really good question in which examiner has asked us what are the two events which there's no need to remove them from the net profit. Obviously, ordinary dividends, they don't have any effect on the net profit. So while calculating EPS, there's no need to adjust this ordinary dividend. So A and E is your answer. ACCA has correctly calculated its basic EPS for the year. Okay. Allocate the item to the appropriate category. Include within diluted EPS calculation. So what we have to include in the diluted EPS calculation? Include within the basic EPS calculation. Okay, let's see. A 145 right issue of equity shares during the right issue comes in the basic EPS calculation. So simply a right issue comes here. So you have to properly write each and everything. The issue during the year of a loan note convertible. See, convertible loan note comes in diluted EPS. Students, you have to completely write each and everything, but obviously in exam, just do the copy paste. The granting of directors' share options. Share options are the potential ordinary shares. So potential ordinary shares we consider in diluted EPS calculation. This is diluted EPS. Basic EPS only. Diluted EPS. Equity shares issued during their as the purchase consideration for an acquisition. Parent has acquired a subsidiary and they have issued shares. These shares will come over here. Shares issued to acquire the subsidiary. Okay. Question 129. Many commentators believe that the trend of EPS is a more reliable indicator of underlying performance than the trend of net profit for the year. Okay. Students, just give me a minute, please. Just a minute. Let me repeat. Many commentators believe that the trend of EPS is more reliable indicator of underlying performance than the trend of net profit for the year. Which of the following statements support this view? Net profit can be manipulated by the choice of accounting policies, but EPS cannot be manipulated. Obviously, if you can manipulate the profit, then EPS can be manipulated. So A is incorrect. EPS takes into account the additional resources made available to earn profit when new shares are issued for cash, whereas net profit does not. That is perfectly all right. Why? See, whenever there's a cash issue, whenever organizations, they issue shares against the cash, so we know that exactly when, how much shares the company has issued against the cash. But by looking at the profit figure, we cannot say how much cash company has raised. The disclosure of diluted figure is a forecast of a trend of the profit for the future. No, there's no such thing. Calculating diluted EPS does not mean that you are giving us a trend of profit for the future. The comparative EPS is restated where a change in accounting policy affects. No. We actually restate the previous year EPS. We actually restate the previous year EPS whenever there's a bonus issue, right issue, even one of them or both of them. Okay, student, just this question I'm giving you as homework. So it's my request, please, every one of you, at least try to attempt this question. Inshallah, in the next class, we'll be practicing more on IAS 33 and we will be completing IAS 33 in the coming class. So in the coming class, I'll try my best to do a lots of practice and complete your IAS 33. So I would request, please do practice IAS 33 questions, at least all those questions which we have discussed, try to do them at least twice. So thank you very much and have a nice life. See you all inshallah in the next class.